Good morning. We find ourselves on this crisp Friday morning of November 10, a pivotal moment to delve into the market emotions on TradXZs.com. Yesterday, the captivating growth dance we had witnessed in the American markets, particularly on the SP and Nasdaq, came to an abrupt halt. A sudden shift as the Dow Jones experienced a negative day, contrary to Nasdaq, which, as you may recall, had been steadily rising until October 30, giving us 8 consecutive days of momentum. However, yesterday brought an unprecedented pause, with Nasdaq losing about 0.80, or perhaps a bit more, let's say 0.90 compared to the previous closing. The Dow Jones, influencing the market's sensitive strings, closed with a depreciation of about 220 points, or 0.65. Jerome Powell's words had a significant impact, expressing his lack of full confidence in the current monetary policy, warning financial markets not to expect imminent interest rate cuts. This warning resonated in the markets, creating an atmosphere of uncertainty and pushing bond yields higher. The consequences of this reversal were felt directly in Asian markets overnight, with the Nikkei, Kospi, and Hong Kong all in negative territory. This trend also extended to Europe, where markets lost about 0.75 of a percentage point. The TAC shows slightly better resistance, standing at 0.50 at the moment. Looking ahead, the dollar naturally regained ground in response to Powell's words, stabilizing around 1.710, 1.670 against the euro. Meanwhile, the Bitcoin rally continues unabated, staying firmly above 36,000 despite some slight fluctuations. Beyond the numbers, the current economic situation is shrouded in an aura of uncertainty. With conflicting data on the labor front and in the macroeconomic sphere, especially from the American economy, and looming geopolitical risk, financial markets are in a state of indecision. The prospects for the rest of the year are veiled in uncertainty, with the shadow of possible interest rate hikes and the perennial question of whether the positive trends seen in 2023 will continue or if fear will return to the markets. We will watch closely, paying attention to emerging macroeconomic data, and most importantly, the Fed's moves in their upcoming December meeting. A period of uncertainty permeates the markets, leaving us eagerly anticipating the direction they will take in the coming weeks.